What's happening with you? This is your boy Nova Man Pierre Lawson, aka the Gangster Wall Street, here with the Wall Street Jackboyz. The whole squad is here, and we're gonna assess the market, do a quick recap on what happened last week, and then we're gonna get a game plan together. What I'm saying, going into this coming week. So we already got some things on the table that we can quickly look at, coming this week. So um, we got everybody in here. Last week was a pretty interesting week, right? So we had like we had some good movement, especially in the FANG stocks, of course. Tech boom, ate off of Nvidia like twice in 1 week. That was enough for me. Um, and then we had some upside, potential upside on Amazon. I believe Corey, you guys are eating off of Amazon still. It was too extended for me, but that was good. Eating off of Amazon. And then we had the little flash crash, the little mini flash crash there on Friday. Before then, of course, we had the election, the British election. We had what else we had last week? I can't even remember right now. It was a very eventful week, right? So uh, we had the Dodd-Frank the Dodd-Frank bill getting passed, which helped out the banks, and so that was one thing there. I was looking into the financials, of course, and let's just take a look at that real quick. I had some questions about it last week. And then I took a small position in because the market is already extended. And I took a small position in Wells Fargo as a hedge type position. There was some weird things that was going on with the bonds and the banks. Didn't really quite understand what was going on. They were both going up at the same time, and the bonds ended up smacked. So the play that I was looking in on that in the financials, of course, I think we already went over this before about this pattern that we see set up, head and shoulders pattern. Sometimes they're valid, sometimes they're not. But for the most part, I don't ignore them when I see them. You know, um, those that's skilled in that area. Head, left shoulder, right shoulder. You know, to complete it, it's supposed to do that. You know what I'm saying? That's what we are looking into in the financials. We ended up getting a fake out, of course. But it wasn't just like a fake out, it's fake out. It was because of the laws being passed. So we had the Dodd-Frank bill getting passed, and so when that happened, the banks rallied. Okay. So let's see. Instead of the head and shoulder pattern coming to fulfillment, right? We see that it's trying to break the shoulder and it's trying to go up, right? But still early, still early. I'm still keeping my eye on it about it, but this could nullify that move, all right? And that bill is very instrumental into our financials. Okay, if you want to look at the financial sector, you just look at XLF. It's the whole sector with all the banks that's in there. Okay, and so you can go and you can go back and look. Let me see. Go back 20 years on this, man, and see what happened. All of you guys were alive when this happened. I remember that, right? So that's what we saw happen. And then we had the years here under Obama, and then last year not so good. This year it's rallying back up. Now, so some of the stuff that happened this year is that the interest rates, like when this happened, the government came and said, forget that, we taking over. The banks, regulating, slapping all kind of stuff, to protect the U.S. consumers, right? So I'm not going to get into politics, but I need for you to understand how this stuff works with us making money. And I'm not an economist, I'm not some financial advisor, blah, 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 but this is just, my assessment here for you. So, and it's valid. So, um, but just taking a look, when that happened, the government came in, they did the Dodd-Frank thing, they regulated everything, and with the banks, what they're able to do. Okay, so it's not just the banks, the whole financial industry. I come from an insurance background, so banks and insurance companies, they all go together. They all govern under the same laws. And so the way these banks, when they get their monies, like when they get your money, and insurance companies, when they get your money, the stuff is very complex. Okay, I'm not disciplined in the sciences of the economics and things like that. I think Rob has some background. Some other people have some background too. But then I work with the companies. I know what's going on, so I have insight pretty much. You know what I'm saying? For my my intelligence on it. So what happened is, all of this is good, right? And then suddenly this started happening. Well, the interest rates were so low. Like when the banks get your money, they invest it. Okay, so they don't just hold money. They stuff is being invested, and when it's invested, they're hoping to get interest rates, and they're looking to turn the money that you give them into profits. And uh, there's a certain time frame, there's a certain mathematics behind how long it should take for them to turn profit off of the consumers with the money they get. And it's very complex stuff. You can go and look at 10K files, if you're into fundamental analysis, which I started in. If you look at these companies, like it's hard to even read their statements because it's, especially when they go global, the monies are going through different currencies and it's, but what's important to know about it is that they end up figuring out that the money that they were investing, that money was not making money. They were actually losing money because of the interest rates are so low and then inflation and all the other complexities. They're discovering they're losing money, right? So they try to, they all got to make a profit and they're trying to compete on a global scale. So what they want to do is be able to make more money, but they need the government to get off their back so that they can do that. So when Trump came in, that was what he ran off of, right? And so the Dodd-Frank introduced things like sci-fi and things like that, like AIG and all those companies, the government took over. Some companies are still under it, but they're getting ready to break out of it. And when they break out of it, they've been rallying this whole time because of the news on, okay, the policies that's coming under this president is going to be helpful for us. Not only the policies that he had, but the interest rates, which the feds, they, lowered them down so low, in these years, basically. But the banks, like, they can't make any money, so they're losing money. They need for it to raise up, and we saw some increases. We've seen our first increases last year, right? And now we're seeing more this year. So with that happening, that means that the banks will be able to make more money, which that's their goal, versus losing money. And so that what happened last week wasn't just it was a hit job on the FANG stock, right? So we'll talk about it in a second, but it wasn't just by coincidence. That bill was very, it's something for the banks, right? So with that being said, it looks like we are entering a shift in the markets from the techs to, like the energy sector, which they did good. We'll take a look at that too, and then the financials, because the markets wasn't really, wasn't that terrible. The Nasdaq got killed, so you guys saw that. I was watching it live; it was freaking crazy. Um, but it's still too early to say that the money is rotating out of the tech stocks. I think that it was just a definite wake up call. Its premium got sucked up. It was like a hit job with the algos. We'll review that here in a second. But I just wanted to kind of review that with you guys a little bit, help you to understand like why in the world did the bank stocks go up, the financials or whatever. Um, and so anybody got any questions with what I just went over on that part? Let me see. So that bill again, when it got passed, we see that happen. We were in a squeeze. We didn't know if it was going to break or not, but you see it firing up. So the financials are good. We can start focusing a little attention in that area because of that knowledge that you now have. Okay. Um, and then what else, Ralph? Energy. So the energy stocks, we see, a little rally. But again, I don't like this sector anyway. As you see, it's clearly in a downtrend still, but we can still make some money off, in that sector by, fishing for the in there. Um, all right. And so, let's see. All right. So, this is the SPX. But when we talk about the markets being extended, right? I tell you guys all this all the time. I wish Young G was in here because he got smacked up real hard this week, and I wanted to encourage But hopefully the knowledge that you guys get from the class make all this stuff start to make sense on like how we move, why I move the way that I move, and then also make the vocabulary a little more concrete to you. When we talk about things like a stock being extended, right? I think Corey, Rod, all of us talk about it in the group all the time. Like it's hard to call these tops because the markets are so extended. It makes it a little more difficult to navigate because we have to be cautious because of that. And when we talk about a market being extended, and you take a look here, let's say this blue line here is the ceiling, and this one here is the floor. Okay. Anything that's under here, under that line, is oversold. That means they sold too much on it, and it's got to come back up. And anything that's above this line here is overbought. That means there's too many buyers. It's not enough people to even sell it to. So then it forces the reverse anyway. So that's what we talk about something being extended. Like when I gauge this, I'm looking at something being extended. If it's extended, then I have to attack it with caution. Okay. We attack it with caution because the downside potential outweighs the upside potential. You heard us say in the past or in the streets, what's it called? The bigger, the taller, the harder they fall. Something like that. You guys correct me later, but I know it's something like that my mom used to say, right? The taller they are, the bigger the taller, the harder the fall. So when you see like this is the ceiling, and we've been in la la land, right? So this is not a big fall if it goes here to here, right? But if it go here to here, it's a bigger fall. So when we talk about being extended, that's what I'm looking at. Like, okay, be cautious. Damn sure not going naked on nothing. When we joked about it in the group. Of course, you've seen that. But if you're going to participate, then make sure that you have risk-defined strategies. The strategies I teach you guys, the put spreads, the vertical spreads, credit spreads, all those things are, valid. Not that the calls aren't, but the only thing is that the upside potential, that you see here, is not as great as, this here going down. All right. That's what we talk about. So with that being said, if you guys are watching uh, Amazon, this is like bananas. Like seeing that, and y'all know Amazon's been like the hype of the week, right? Everybody eating off of it. Again, we had a couple people in the group that was eating off of Amazon this week, and you got to get the bread when you can, right? But just understand when you see a stock like this, it's been extended, way back when, right? Back since May, right? And we're in June, a whole month now. This thing has been in the clouds and continue to push and push and push. There was some psychological levels that it had to push through. It was that thousand point line, and it did that, and then still stay up. But when you see something like this, that's why you haven't seen me participating in Amazon like that, even though I wanted to, but because I know how extended it is, it's like beyond belief with me. And so I'm like, this bad boy gotta come down, and what's the next line of support like when it comes down, right? So we got some Fibonacci lines, right? Which when we did our assessments on it in the past, as you see, Fibonacci's are telling you this thing is extended, like it's above our fibs, right? Um, and so I'm thinking, okay, well, it's here. It's got to come down, but where's it going to go down to? And so you guys got the setups that we have here that you see on here. And I could take this Fibonacci off, it's a little messy. All right. So just looking at the moving averages, which acts as our support and resistant lines, along with the Fibonacci's, they highlight support and resistance. Okay. Well, when we see this here is the 9, the yellow line, that's the first level. You see this dotted line, the simple moving average, the 20, that's another one, and then we got the 49, right? These here are different lines of support. So I'm looking at it, I already know, okay, well, this is the first line that it can go to. It can fall to that, or it can fall to this one, or it can fall to that one. And so if you're somebody who bought in, $1,000 stock because you're in on the hype, you don't understand that this is the downside potential. Like, where are we going to go up? Like, we can still go up. Yeah, we can, but how far we're going to be able to go up on it. The stock is overpriced. Okay, it's everybody knows it's overpriced, but yet they're getting greedy, like Warren Buffett talk about. They keep getting greedy. Somebody gonna get hurt. All right. So yeah, you make some money here, but just as long as you understand that this is looming, you know what I mean? So that's what we talk about using risk-defined strategies. If you use risk-defined strategies, then when this happened, you wouldn't panic, and you wouldn't be, posting crazy huge losses as we saw, people posting. I took a loss as well on Apple. You guys are following in the group. I got in Apple on the open, and I was actually up like 20% or so, doing good on Apple. And then that happened, right? The hit job happened. When the hit job happened, I think I lost like 80 something dollars. I mean, I took 100% loss. Of course, you can take more. 100%, took 80 like $86 loss on that. But I was already shed at light anyway. I didn't have any other position. I had the steel going. I had what else I had? Well, I'll show you guys that stuff or whatever. But so even with the little loss that I lost, right? I didn't even lose that because I kind of made up for it with the other trades that I had. It's still working, right? But you don't see major losses. So again, we talk about people always teach about how to make money, but they don't teach you how to protect your money because you can lose all your money. You guys go back in all the classes that we have, especially how many of y'all was how many of you guys seen the grow in the small account or the baby account, what it's called? How many of y'all seen the grow in the baby account, the class that we did? Mark, okay, now you got it. Anybody else see the grow in the baby account? Anybody else is in that? Mia, okay, Ron, good. That that class is like golden, man. So I mean, if you guys didn't see it, man, make sure you spend some time in watching the videos because the stuff that I put in these classes is like wisdom, man. Like nobody's teaching wisdom. They teach you by call, by put. You can get that off of Investopedia. There's no need. If I'm teaching that, there's no need for you to buy my classes. I'm teaching you wisdom that you can't get from books. You know what I'm saying? And this is save you so that you're not blowing your account. You know what I mean? And so you have a lot of people that come from other groups, following other people's teachings, and you see them posting crazy, big losses. They don't understand strategies that we use. And the strategy that we use, yeah, it caps your unlimited potential to the upside, but it also, caps your, unlimited potential on the bottom, you know. But it gives you the edge as a trader, period. And so as you guys continue to grow in this, you'll know what I'm saying, and you can back it. And some of you guys are already backing it. Again, I took 100% loss on Apple, 80 some dollars, 80 some dollar loss on that. You know, uh, 80 some thousand dollars, excuse me, 80 some dollars versus somebody losing thousands. We had a young guy lose $5,000. Like that's substantial. I don't know how much money you got. You shouldn't be taking those type of losses. And so again, we teach the risk management so that you don't have to worry about those. You're not over trading, and that's what happens when people get greedy. And the young traders, new, and every week this hype is still popping, but they don't know nothing about technical analysis. It's showing you like, yo, this thing is extended. That's what that means. So whenever you guys are looking at your charts, this is things that you need to start looking at. You'll be able to play this into your decision making. You're going to get into something. Say, I got some signals. It looks good, but you can't ignore stuff like this. All right. All right. Cool. And I was talking to my man, and I think we was having like a little debate, about somebody being able to catch this. You see, just looking on Amazon when it hit that 927. Was any of you guys watching the market live? Most of you guys are probably working, so I'm sure you didn't get to watch it live. I actually did not catch the whip live. Let me go in and show you how fast this thing snatched up premium. And I'm on a 1 minute chart here, so this is day traders territory when they watch these small time frames. I'm normally on a 5 minute chart when I enter my order and stuff like that. But could you imagine if you guys watch the markets through the day? You imagine Amazon is already low, right? So we had 977. It's teetering off like it's just pretty much gathering support. When you see that, I know you probably panic. It's crazy. Now this move here is like a 1 minute move. right? So who made money off of that, right? Like people got wiped out, but somebody caught this, all of this stuff down here, right? They caught that. But really that stuff was too fast for most humans to catch. These are algos, man. You know, this is a hit job. You know what I mean? So yeah, that was a hit job. Definitely would have been great to get back in on the rebound on this one. Let me take it back on the rebound on it. But you know, we're going to play conservative this week with these tech stocks because we got to see how it's going to happen. And to be honest, I didn't even have to take the loss that I took on Apple. I was thrown off by the internal market internals because it's like, you know, I see it going down, but is it sustained, you know, pressure? Let me see. You know, we're looking at the internals here. And so this didn't tick me off. And let's just take a look at the VIX here. I don't know if you guys can see this. Let me try to, I have time to teach all this stuff, whatever. But just pay attention to the VIX. This right here, this is the fear gauge, okay? All right. So when this thing is low, when it's low, you know, that's playground for the bulls. So if you're, you know, if you have a long, you know, bullish bias on whatever stocks you got, you know, you're good, you know. And this here is low, right? Are we talking like at least when is it like since the 90s? The market hasn't been this low since like the 90s or something crazy. So you see the markets get this low, you see like those tech stocks is going up, right? Right. Right, Topaz, yeah. So like when the fear is low, people get greedy. That's what happened, right? So when they get greedy, we see that happen, right? And so when you see it rise up, that means the fear is coming in, okay? Fear is coming in, and so if you are alone, you want to go into your risk management mode because you know chances are the sell-offs are going to happen when people get scared. All right. And again, when we talking about people, we're not talking about like people like you and I. We're so small in the market they can't see us. You know what I'm saying? Like we're non-factors. We're talking institutions like the big boys. You know, Wall Street. You know what I mean? Like they're the ones who make this stuff move. You know, we're peons. So they come and visit us every once in a while to come take our money. All right, and that's what y'all saw. What y'all saw happen right there. You know, they came knocking on the door. So you know, when the postman come, you know, that's what happened. If you know, you got to be prepared, man. So, so I know there's been a lot of chat in the group about it, you know, um, and so I just wanted to actually be able to speak towards this for you guys so you know what's going on. How do you protect yourself against something like that? Well, nobody knows the future. Nobody knows the market, what the market is going to do. I don't care how great of a trader you are, how many millions of dollars you made. It does not matter. Nobody knows uh, where the market is going to go. We use our tools as technical traders to guide us, but even our tools, you know, they can get, you know, smacked up. You know what I'm saying? So the good thing is that we have tools and we have a technical analysis. We're not just trading off the news or the gut feeling. But you have these moves like this, and this is a three standard deviation. This is not normal market moves. So you have the unexpected moves happen like that. They happen from time to time. Do they happen often? No, they don't. Uh, you know, 70% of the time you get normal market movement, right? So we do have our predictability factors. You know, we still got to prepare for stuff like this. Um, you know, I think I was watching the movie Equalizer. Denzel Washington. What he say? He said when you pray for the rain, you got to deal with the mud too, right? So, you know, everybody, you know, making all the crazy money. Well, when this happens, you got to be able to deal with it because it's gonna happen. And if you guys watch that Growing a Baby account course, that course is very valuable because you was making all this money. That money should have been out of the market, and that's why I clearly show you guys how to do that. Uh, you know, taking that money completely out of the market so it can never be taken. You know what I'm saying? And then going back to the struggle, right? So again, if you know how to trade, you understand this stuff. Account size does not matter. All right. When people talk about, man, how big is your account? How much money did you make? You know, almost disqualify myself from. I'm like, I'm not a multi-millionaire trader as of today. Maybe I shouldn't teach, what I'm saying, people this stuff. That stuff doesn't even matter, man. Trust and believe me. I know so many multi-millionaires who lost all their money. Yeah, you can get lucky, and you see that happen when people post, and try to show off their accounts. Yeah, I mean, blah, blah, blah. Yeah, you did. But then when that happened, when the rain happened, you didn't know how to deal with it. You know what I'm saying? And then you damn near wipe your whole account out. And some people blew their accounts, right? And again, I don't sell nobody on Kool-Aid. I just keep it all the way funky with you guys. Like keep it real. Like, yeah, you can make crazy amount of money. Yeah, that's possible. But you still need to be able to prepare for that. That happens. So just keep that in mind. All right. Anybody got any questions about that? But yeah, that growing a baby account, all this money you'd have been making, then you got to take it out. I'm just pointing arrows, like taking it out of the market and then reinvesting it because it's free money that you stole from Wall Street, basically. You go put it in real estate, go put it in, gold, silver, whatever you're gonna do, but just take it out, pay yourself. You know what I'm saying? Take your family on a vacation. Oh, good, Jermaine. That's what's up, man. You know what I'm saying? I'm glad you're still in it, man. Like, people lose money. Like, that's normal, man. Like, you got to get comfortable with taking losses. I talk about all the time. Man, take your L like a man. You know what I'm saying? Like, you take your L, take it like a man. But you know what I'm saying? I don't want you to blow your account, though. You know what I'm saying? That had you throwing up out here. Like, I think David, he posted a picture in the group, and that was funny. Somebody hovering over the toilet bowl. Like, yeah, be careful. Now, Jermaine, I know you trade, you do like some real risky stuff, but you've been doing that for a while. You've been doing like your naked trades and stuff. But from my understanding, you have the opportunity to monitor and manage your trades, where most of the other people in here, they work and they don't have the opportunity to monitor it, what I'm saying, the way that you will. So, but again, we have so many options to make money. So whatever makes you money, man, that's, keep it up. You know what I'm saying? But just make sure you prepare for when the mud hit. All right. So with that being said, that's just a cap on last week. So where do we go from now? Right? Oh, you work too? Okay, cool. So you keep your position small. That's what's up. So where do we go from now, right? A lot of people ask questions about the FANG stocks. You know what I'm saying? Like, this tech situation, is it gonna reverse the markets, right? Nobody know. We don't know that. You know what I'm saying? I do know this. This is what I do know. This right here was a hit job. Okay. Is it going to sustain though? That I don't know. That I don't know if it's going to sustain. We'll be watching this. Okay. We'll be watching that for this week coming up. Uh, Jermaine, so what do I see in Nvidia? What are you seeing with Nvidia? Well, as of right now, on Sunday, I don't see anything with any of the tech stocks right now. Like for right now, it's we got to see how this week is going to play out. All right. Um, when you've seen Nvidia, we ate off Nvidia all last week. Now, you remember I told you about this being extended. And you guys got RSI. You might not have my two, but you got I set up. It shows you this. It shows you that. So, you know, we knew that. The Fibonacci told us, right? We knew it was extended, but yet we still, we still want to play with fire. You know what I'm saying? We made some money, but it was riskier. But, it didn't just go in without a risk-defined strategy, not at that point, because, you got to understand that it was extended. So I got in, got some good money off of it, but, it just got ridiculous at this point. You feel me? Like it's overbought to the max, and then you get punished. So just remember that overbought stuff is valid. You know what I'm saying? The market has been doing some stuff that's not normal. Like the whole market is extending. And we all know that. I've talked about it in all the past webinars. Like I can't call these tops. Like it's so difficult to do right now. Versus like when you're like down here, you know what I'm saying? I can see, well, my bottom potential is here, right? And my upside is here. And then my upside is greater than my downside. You feel me? So if you want to play that type of stuff, then you could do it here. This is more ideal. But doing it up here, you just begging for trouble, man. So just keep that in mind. And if you guys notice, man, all those FANG stocks, they all look the same pretty much. You know what I'm saying? So They all had that big crazy dip. You know what I mean? And this is again, this is on a daily chart we're looking at. You know what I'm saying? So the overall trends on them are still bullish. So that's why I'm saying I'm not having a bearish outlook on those stocks, but I'm not playing them right now. I did take a position in Microsoft before the markets had closed, right? I did get in on this one, and I'm up like 30 some percent. This is one of the positions I had got into. Now, why did I get in this position though? Um, let's go here. I got into the position after watching the markets doing what they were doing. Uh, we watched this happen, right? Well, I watched it happen. I don't know if you guys watched it happen. I saw it happen. And again, and this is funny, right? You see a lot of people talk about trading and tell people you need to trade, blah, 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 trade, trade, trade. If you would have bought this stock 10 years from now, and you bought this stock 50 years from now, you'll be a multi-millionaire, blah, blah, blah. That's what we call hindsight trading. You know, it's easy to tell somebody hindsight, but when you in the field, as you guys know, we're in the field, that stuff holds no value. You can't tell me I should have bought Amazon 20 years ago. Like, well, should I buy Amazon today? Right? You know what I'm saying? Should I buy whatever today, and why should I buy today? That's what's more important. And the tools that we use give us that insight that that we're looking for. So again, the Fibonacci kind of help us see the future. It's my little oracle, I call it, and it works like clockwork. So yeah, as you guys see all the charts I post and things, it's crazy how it works. Don't ask me how it worked, but it worked. So and some people might not know how to use it because they've never been trained on it, and I've been trained by the best. So there we go. Anyway, so seeing this go tap down here, I know this golden ratio, this 618, this is a key level on the Fib. This is going to be support. I knew it's going to be support. I saw it whip back up. So I got in on it, got in on it here. I see it clear. This EMA here is another major line of resistance or support. And I see, it broke through that. So I see, we had established a bottom that's in here. That little buy trigger here as well. And I see my MACD coming up. So I had got in on that. But I also got in on it also because I had knowledge that there was going to be this E3 conference today. They have it like right now, actually. Microsoft revealing their new console and some other great things, which gets the gaming community pretty excited. So I don't know how it's going to play out tomorrow, but I am expecting some excitement. Hopefully we'll get it. I don't like to use hopefully stuff, but even if it doesn't, I still got it at a good price. I'm good. The market want to do what it's going to do. It's going to go down even further. Then I can just take my profits and run. You know what I'm saying? But I was able to watch this live. I don't know if I posted it in the group or not. I think I posted something about it. Yeah, I posted it in the group. I told you guys I was in on this. And so, yeah, so I got in at the right place, you know what I'm saying? And we'll see how it's going to play out come tomorrow. But with the tech stocks, I got to take a breather. Like they need a breather. So it's easy to go to the FANG stocks, but it looks like they had a breather. We'll see how they do tomorrow. But I'm not placing any orders on those today. Did any of you guys catch the steel? We got in on steel, and I think from the last video, I think we had reviewed it then. All right, I think we had reviewed this from then. So I posted this. Do you guys remember when I posted this in the group? When we did our last video was Sunday, I believe, last week. And this because it was in a squeeze. Now I don't think I came up with it. I want to say, did Ashley bring it up? Somebody brought it up. Either way, man, we saw this squeeze formation here. We saw the squeeze formation that was here, and then the Fibonacci is already there, and it held up to that as a key line of support. So we've seen the support. I've seen it, consolidating. So I'm like, okay, that is holding. So we knew that was holding as support. And then I see my crossover switch, this line here switch from red to green, right? And so that, gives me better confidence. Also saw my non-EMA crossing over to 20. We had a trigger right there, the little blue arrow tell you that. And then you see how the yellow line, so when the yellow line goes over the other lines and we're bullish, the stock itself, this is like counter trend trading because it's still bearish. It's under this 200, under this 49. still bearish, but it's got to cross over these to be, to go into a bullish mode. So right now, this is like a counter trend trade here, expecting for it to continue to bounce off of this floor and get some more upside potential. I'm looking to tag this first target at $24. Uh, but I can, and I can see it going all the way out here to the 27 for this next line. If it clears that, then we're looking at, that key line that's there, right? I mean, it could go to the 76 too. And you see here, actually, that's where it's going to go next. This one here. But we got a lot of key lines that's there. But, ideally, taking profits when you hit this first one, all right? So, and what that would mean is that this squeeze is going to fire off. And you'll see it turn green. Bing. We already made money, all right? We already here because we caught it while it was quiet in the squeeze. So you guys seen the squeeze class, and you already know this whole setup. Uh, let's see here. Let me get this off the screen. I got so many notifications. Let's see. Pull it back, pull it back. Here we go. All right, sorry about that. But yeah, so again, we're looking to tag this target here, and then we out of there. All right. Behind everybody else catch whip of it. They're like, oh man, I'm about to play it. And then they buy here, and then they see, what probably will happen. They can bounce back down. And they got in at the wrong signal. So we get in when it's quiet. Jeez Louise. I'm too popular on Facebook, man. So, but yeah, so that's the game plan on that one. Still in the squeeze. It hasn't fired off yet, but expecting to fire. We're kind of with a bullish bias. We'll see how that plays off. So those are two that I was up on Friday when everybody else had all their eggs in one basket, which was the tech sector, getting smashed out with the tech stocks, which I got smashed out on Apple. So doesn't mean that I didn't lose any money. I did, but I actually recovered my losses already. Jermaine, yeah, it was you who brought it up, I believe, last week, Jermaine. And I think I had called you out on Facebook because I was trying to remember, was it you or was it Rob? One of you guys had called it out. Yeah, you called it out. Okay, good. Yep. So good play, man. Yeah, we're gonna continue to do good with that. So at least you see the targets there. All right. And what else we got? So we got some there's some activity that's going on this week. There's some events going on this week. Let's see if I can all right, yeah, I can pull it up right here. So I posted this in Facebook so you guys can see it too. So Monday, there's nothing significant happening on Monday. Tuesday, nothing significant there. That I mean, we're talking about stuff that's, news that moves the market, right? News happens every day, all day, but we're talking about news that moves the market. Um, so like Monday and Tuesday is pretty light, you know what I'm saying? There's nothing really there that's really gonna move the market. But Wednesday, what you need to know is that the FOMC, this is the Feds, these are the regulators. Now when they speak, they move shit, okay? So just understand when they speak, shit start to move, okay? So you see when Trump tweets stuff start to move, well, these people here, they're pretty much more powerful than him, in my opinion, okay? They talk, things can happen with the market. So if you're gonna make any plays, just keep in mind Wednesday, things can happen, okay? Things can happen. I don't know if it's gonna be to the good or to the bad, but that's what we are expecting. What are we expecting from this? Um, there's another interest rate hike that is to come, and I believe it's 95% confident that they are going to increase the interest rate. So, Feds increase the interest rates. Who is going to rally? Like, who does that benefit? Somebody, let me know in the group. Who does that benefit the interest when the Feds raise the interest rates? Bingo. Ron B said the banks. Banks. We just talked about it, right? That's why I spent that extra time, talking early, not to lecture your heads off, but you know, this shit right here make you smart, yo. Like for real. Like, look, I'm telling you, you guys probably never even looked at this type of stuff before or had this kind of knowledge, but now you see like why it's important for you to know this stuff, right? Because it helps you, helps your decision making when you're on the field. Because you know about this event that's coming here, we already understand that, it's a 95% chance that they are actually going to raise rate. Who benefits from that? Okay, now if they benefit from that, what do the shareholders do? I mean, they rally, markets go up, right? So that's, again, doesn't mean that the financials are going to, perform better than the tech stock. But we have evidence that says that, you know what I'm saying? Like, if a Wednesday, they're expected to release that. So come Monday, I'm planning on, that's what I'm looking at. Financials, trying to find some plays in financial. We'll go back over that. We'll just keep that in mind. That's important. Um, if you guys are playing oil and things like that, you see, I mean, that's there too. But what else is going to move the market is Thursday. So Thursday is another key day. Weekly jobless claims. So when the economy, this is the U.S. economy, again, all this stuff is held accountable. They want to know how many people are working, how many people are not working, how many people are getting put to work, how many are not, basically. The numbers are good, then, the S&Ps should rally. The numbers are bad, then the outcome of that, we expect some selling. Okay. That doesn't mean that's going to happen, but that is the expectation. Okay. That's just like the way that it normally works. Just keep in mind Wednesday and Thursday. Some good stuff there. What else we got? We got FOMC speaking on Friday as well. Uh, we got labor market, again, it's more of the job rate stuff, and then building permits for the housing market. So that's what we're looking at for this week coming up. Okay. Anybody got any questions on that calendar that we just looked at, or anybody have any questions on, or see the value of why you should know that type of stuff? Anybody got any questions? I take that as a no. All right. So good. Now looking at the financials, Citi has been performing like a whole lot better than the rest of the banks, right? So we could take a look at Wells Fargo. Right, that's right, Mark. Help us prepare. Well, Wells Fargo again. I did get in this one here, and then I got out of it. Didn't capture my profit off of it in time, but I knew this was a major line of support here. And once it broke through, I wanted to catch in on that, and I did, and I was up, but I did not realize that it was going to pass the Dodd-Frank, right? Or had that insight, and then that happened. So I had to get out of this one. But I was there waiting for that thing to come into fruition, that head and shoulders pattern. When it broke that, that's why I got in because I was expecting that. But I skated off on that. You know, but the chart itself, do I look like I want to play this long? You can play it long, and yes, you can make some money. But let's see, Bank of America. Bank of America actually, uh, Bank of America actually looks a little better than Wells Fargo. Again, we got this head and shoulders, so I'm still cautious about it. I don't know how this stuff is gonna play out. Don't nobody do. Nobody knows. But I know this pattern. That is what's supposed to happen. But before that can happen, the stock got to get to this line. This 200 is a major line of support. Okay, it's a key level. So before it can do this, it's got to go here first. I don't see no sign of that happening right now. And with my crossover here, it's the red green line. It's now showing the support is going to be somewhere there, and look like we're going to see some more bounce on it. So get this out of here. All right, so City has like pretty crazy. So this is what I was going to show you guys. City, we already played this one. No, already had charted. Okay, I already had it charted, but I didn't want to play the financials because I knew about the head and shoulders pattern. But looking at here with the Fibonacci, what do I got here? Actually, I look like I need to redraw it. Okay. All right. First thing we see is a squeeze is here. You see the squeeze fired off long here. This is a really good performance stock. It did this on Friday, so if you was in there, you'd have, cash out and made some money. It still has more upside potential. As we see, overbought territory is not there. Okay. You got the buy trigger here. It was in the squeeze there, and then we seen it fire off long, and it just started. So still got more upside potential to it. I'm sorry, you guys see that little thing post? I'm in like a little debate. We debate all the time. I like to do that for like fun. Okay, well, let me get this out of here. Remove my fibs here. But yeah, if you're gonna play the financials, I would play City. City is again, they on a daily here, it's not in that head and shoulders pattern thing, right? Uh, it's above that, like it's broken out of that. So if you're looking to play the financials, this is something to keep on the list. I did just fire off, so if you want to get in, Monday will probably be the day to get in on a pullback on it if it doesn't take off anymore. So looking there. What else we got on the list? Actually, let me look here on the scan, my scan tools. Let's look at the financials, which you got the financials here. You guys can do this too. Like you just go to your to the scan, that button there, the stock hacker, and I got the wrong setup, but let's see all optionals, and you can just intersect with what you want to look at. I got on the financials right now, and what I'm looking at is stocks above $30, right? So you just put in your studies, add filter, stock, last price, a minimum of $30. Why? Because we're not penny stock traders. If you're penny stock trader, then you want to adjust that to something under $30, right? But what we need high liquid stocks all over $30 pretty much. Okay. Because under that, then you might just want to buy the stock itself instead of trading options on it. So let me go to scan here. Now I got some custom stuff going on with my setup, so it ain't gonna look like yours, but this I like to see it all in one glimpse here. All right. So like when I do a scan like this, I can see what's in a squeeze. I'm looking for things that's in squeezes that's ready to pop, right? Um, I see what's this COF. All right, I see it in a 2-day squeeze. And this is on my daily. That's what this is telling me. Got 8 days on that one. I got 3 days on this one. These are the squeeze, the red dots, the quiet points, the points you want to slide in on. Uh, it's called a 1 day here. Oops, get that out of there. And then we got a 4 day on the one at the bottom. Right. So, these are things that I would put on the list. Like, let me look at those because, the expectations for those to fire long. They're in the squeeze. Um, and normally the squeeze, we're looking for about like eight squeeze, 8 to 10 consecutive squeezes. Anything over that is pretty extended, you know what I'm saying? So the squeeze might not do what it's supposed to do. Okay. So, you just put those in on the list. And again, this is just looking for some premium in the financials. Okay. The energy sector did good as well, right? So, you do the same type of assessment um, with that sector too. Where are we? Energy. Let's select energy. Let's see what's going on there. Scan on it. Not really that much. Let's see. We got 6 here on MPC. At 13 is a little too much for me. 3 down here on LNG. So yeah, you guys can see that. So these are things that I'll put on my watch list. So we already got them in place, what we're looking at, what we're looking for. All right. And let's see, MPC. So after you gather that, and you just go to the charts and just see what we see. And y'all see MPC posted up. I don't know what the company is, but I see setup. First thing I see, there you go. I do see that squeeze. Y'all see that squeeze? I see that squeeze. What else I see? It's not overbought, right? Okay. I also see, I know you guys don't have this tool, but it is this tool gives me that signal that's a trigger. You don't actually need this tool to get it because you got this MACD set up. And when this line crosses that blue line, that is a trigger. That's like telling you to get in there. That's what that's telling you when it crosses like that. So you got a buy trigger, right? Um, and we see the candlesticks are holding support right there. We do see the bottom, that's the downside risk. It's got to first hit this level first, though, if it's going to fall anywhere. So we understand the risk that's in play on that. And that's outside potential. So this might be something that this is definitely something I want to put on the list and see what it's looking like on the opposite side. Thin though, so, you might see a good chart, but might not see a premium and stuff. Man. Oh, okay. There's some premium on this thing. Really not much premium on here, but doesn't mean you can't play it. You just gotta know how to play it. If you're gonna go directional on this, like to the upside, we talk about 2 strategies. You can buy a call or you can do a spread, right? I'm doing a spread. That's the defined. That's the one that you want to do. Buying a call isn't bad too, but the thing is with buying as a buyer, time is your enemy. Okay, so you got to be right and you got to be right fast. Can't be right 30 years on a row, 30 days on a row. You got to be like right, like like quickly, because the theta will start eating away your premium. But yeah, and I say this because this was a part of the conversation that was on Facebook when some people was asking about that. I know some people just teach puts and calls and it's simple, but it's really more complex and complicated than what they make it seem like. Once you actually start to understand trading spreads, and you're like, oh, they should taught us spreads first and then taught us about the calls and stuff, because now I got to learn the Greeks and all this other stuff, right? Which you should learn it anyway, but you don't have to know to make money. So my program teaches you guys how to make money now. And then you can be a genius on your own time. But just remember, we're trading contracts, all right? So we're trading contracts. Yeah, this is the stock. All right, yeah, but we're not, trading stock. We're trading contracts. These are the prices on these contracts. All right, and so we already went over this before, but it's just a quick review. If you're buying, then you need to be buying at the delta 70 and above. Okay, so delta 70 and above. Does anybody know why we buy? If you're a buyer, why you should buy at delta 70 and above? Does anybody know? And I know I went over this in the classes and went over theoretical pricing. I showed you guys like the prices moving and everything, like how it actually plays out. Anybody know why you do delta 70? Why buy at delta 70? Because I mean, Take this out now. A lot of people, a lot of new people come in and say, "Man, I want to buy some cheap cars." Yeah, I buy that 10 cents, right? You bought 25 cents. Yeah, you can do that. But should you do that? No, you should not do that. Let me see real quick. A few minutes. Intrinsic value. Where's it at? Okay. Marcy, $1 it goes up 70. Thank you, Marcy. That is right. So say MPC, this one here, let's say if it pops and the technical analysis goes through the way that we're predicting it go, and it makes a big move, maybe to $60 or whatever, right? So maybe it goes all the way up to, 58, $58 or so. That's a pretty big move if the thing fly off, right? And it can do that. And you'll make a lot of money real fast if it does that. But the problem is, um, when you're buying, you want to buy in the money. Your contracts, you need intrinsic value, like tangible value. And if you just load that on your screen, you can see that. So if you're somebody who likes buying, make sure you put this here because you need to know that if you buy out of the money, there is no value. There's no intrinsic value on those. Okay. Just remember that all the value is up here. Okay. And the thing that's tricky about these is that, Delta 70, you don't see a 70 here. But you see like 83. So you want to get something like 83. But again, you're looking at, $530 a contract, right? $500, $530 a contract to be a buyer. You can go in here and, you can do a spread in there somewhere. Uh, you're not gonna spend 500 some dollars on it, but you might not take in as much premium. You may take in $50 or something like that premium, but you can, multiply your contract and stuff like that. So just keep that in mind. Those are some things that, you know, yeah, you can make a lot of money, but you don't want to be buying this cheap stuff down here. It can be expensive, but every dollar, as Marcy mentioned, every dollar this stock moves, whatever your delta is, that's how much your contracts are going to move. Okay. And that 70 is a close point to a dollar. You know what I'm saying? So even if you bought out here and the stock does its move, say, hey, I'm making some money, you'll notice that you're not really making nothing. You feel me? Like you're not making nothing. You say, why am I not making money? Every dollar it moves, your contract is only making 11 cents. That's why you didn't know how to buy properly. So again, in my opinion, buying is more complex than doing spreads. So what you guys tell me your opinion, maybe we do like some polling in a group or whatever. Yeah, the process of trying to get around it may seem easier, but it's so much that is against you as a buyer. And that's why we talk about the sellers having the edge. We can sit in here, you can sell a spread on this side here, and we can actually wait that whole 40 days, and the stock don't even have to move, not at all. You're gonna make money just with time passing. Like you can do this every month. You know what I'm saying? You're gonna make money. This never moves. It could teeter tot around $54. The squeeze never fire off. If you sell a spread, you're gonna make money. If you buy a call, you're gonna lose money. Time is gonna eat you up. All right. Okay, cool. And then, of course, a lot of people, don't understand slippage, but then that's why you enter your trades at a loss and don't even know it. Man, I just got in, I'll take a loss. And you gotta go back and get the classes. And if you got the classes, make sure you review the information. Uh, and so, I appreciate you guys advocating in the group. Of course, we don't want anybody losing crazy money. Losses come with the territory, but we don't want anybody blowing that account. If you're part of the squad, then you need this information. So if you do have the classes, make sure you review it. If you got questions, make sure you ask, your peers. I might not be available, but man, you got Rob that's in there, you got Mark that's in there, you got everybody that's in there here to help you guys. So just make sure you just post a question in the group. Anything else we're looking to review? Actually, let me just open the floor for you guys. Any questions? Anybody got any questions? I'll take those questions here in the last 5 minutes. So look at IBM. Okay. All right. So remember, IBM is still a tech company, but like chart here, the chart is pretty decent, I should say. Not even that I like it. So like, let me just take this fib off. I want to take this off. Got some lines because it looks like I charted a while back or something. All right. So you say look at IBM. When I first look at IBM, this is what I see. Okay. I see a bearish chart. You guys see how this is bearish? You see how this is bearish? Hello. All right. I'll just make it known for you. All right. This here. Okay. That's major. All right. These EMA lines, like excuse me, these moving average lines, they should be stacked up, right? Like when you go back here, this yellow line should be on top of this pinkish line, and that should be on top of this line, and that should be on top of this line, and the candlestick should be above these lines. When they're in that order, that's a bullish chart. Okay. Once we see this line crossing over that line, we're in bearish territory. Like that's straight up bearish. Okay. And so then all the rest of them start to cross under. But that's how we use these moving averages, as you see. So when I started before I got this configuration, I didn't use this 200. I had no knowledge about it. And you know it's crazy? I got hurt because of this one line that was not on my chart. Like that's freaking crazy, right? I had a couple of EMAs on that. Like I used to trade on like two of them, but like when I got this configuration, like this one here, like this is the best moving average configuration that I've used. So and it's pretty accurate. We'll see, as we go on the 30-minute charts, but the chart is bearish. So then we already established that it's bearish, and then again, you can use the weekly or the monthly just to verify that a monthly. You see that it's bearish. It tells you there. This is the bigger trend. Okay, it's like going out on a universal view, looking at the planet. Okay, we go on a weekly, and we see it again, bearish. Right. And if you got this TTM trend, it makes it easy because it highlights blue as bullish, red as bearish. So anytime, it just makes it easy. And you can use it on any time frame you want. I like to use it on my anchor charts as weekly. And again, I'm just using the weekly just to verify my daily, pretty much. All right, so we see that we already see this bearish, but what we did see this development here. We have a floor that's established, and um, it's holding the floor. Okay, we see the 9 EMA is starting to cross over. We got that trigger here because that's the crossover point. It's still teetering, so it's going sideways. Right, it's going sideways. And so, type of strategies you use on these, replace, iron condors, butterflies. You can make yourself some money. I know Jermaine does those all the time, right? So you see some sideways, I'm gonna make a sideways strategy and make money off of that. Yeah, you can do it that way. It's not my favorite strategy stuff. They're commission heavy too. Um, so for that reason, I'm not looking to play it that way. But what I do see developing is this squeeze, right? I like that. Okay. Um, I see that we're not in the extended territory. We're at the bottom. So when we're at the bottom, the upside potential is greater, right? So I do see that, and I do see this trigger here, and I do see my MACD crossing over. And so with that insight, uh, that's evidence. That's enough evidence to get into play to the long side. Definitely not looking to short it, even if it does go down. I don't have any evidence to short this one. So upside, I'm looking at if I was to play it, this has got to be this is moving average alone. If you don't know the fibs, you don't have to. Moving averages, they work together. I use them together. I can just look at that and say, okay, that's the first level, of resistance to the upside. So, uh, but I like the chart. So let's see how we'll see how it plays out on Monday again. kind of more cautious with the tech stocks, and we'll see what's going to happen. But if that's a play that you want to make, then do a defined risk strategy, do a spread. Don't go naked. Do a spread. So therefore, you got a defined loss and a defined top, and you'd be good to go. But I like this idea. It's not bad. Not, not bad. Let's see what the thing on the thing looking like. All right. Yeah, you can get yourself some premium. We got some activity here. Got some open interest. You know what I'm saying? So we got if you look straight at the money, it looks pretty decent. 40 days out on this. Again, yeah, you can go. And again, you can play these smaller ones too, right? But why not give yourself some extra time? You can bring in the same amount of money, you know. And so normally you have to go out. You go in on these days, not that much money, not that much money on these. And yeah, you can buy calls on these. They're cheaper, of course, but the beta it works at an accelerated rate once it gets below, those 20 days, last 20 days or so in a month. So start to go faster and faster as it hits expiration. So you got to be careful on that too. You need for it to make a move fast. Let's understand that. All right. What about the squeeze popping? Again, yeah, we want to see the squeeze popping, but we don't know when the squeeze is going to pop. Marcy, the squeezes typically last normally, 10 sessions or whatever. And we can count here from the last time I did a squeeze. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It stayed in for 12 sessions. This is earnings, so I don't count those. There's no earnings up ahead, so this will be a good one if it does pop to the long side. It went in for 3 days here before it had that move. We're just going back in history, seeing when it did it here. Look at that. That's such a beautiful move. And that squeeze there. Yeah, that was good. And so I don't know how long this squeeze is gonna last, but it looks like it should fire long. Should. Again, nobody knows the future. But you want to slide in. If you're gonna slide in, it's not a bad time. You see the histogram starting to go to the long side, so that we got more momentum, volume that's in there. All right. So and then we got a trigger. So yeah, we can play IBM and look up setting up a trade for it, but it'd be like probably through the intraday. I gotta see how the market's gonna work right now, tomorrow. But keep this on your list, all right? I'll let you guys know when I get in, or somebody else get in. Just post it in the group. All right. Anybody got any questions? Any other questions? Yeah, make sure. Let's see. Yeah, if you ain't got the Wall Street Jackboyz trading journal, I know I haven't done a great job selling it to you guys, marketing it to you. This is like one of my greatest accomplishments, I would say. But this is pretty dope, man. Um, it's a lot of information. You put the information in, but it does the work for you. It has a risk calculator that's in here. So when you're trading, um, which we got the blueprints on the website. It gives you a blueprint for your risk model, like based off the size of your account. Then you say, well, the size of my account is here. You just put that information there, and then you put how much you're trying to risk on your trade, and then let you know. Like that's how much you should be losing max. So, this helps you prevent you from losing $5,000 or whatever the case may be, because that's your max potential loss, right? And let me see if I can get this thing. Maybe you got a small account, right? Just type it in, right? 5,000, right? 10%. That's how much I'm willing to lose on my account. So if the market does a flash crash or whatever it's going to do, come in the chat room. I don't hear nobody talking about I lost 5,000. I don't care who you follow. You in the Jackboyz squad now. And so stop following whoever you follow and get this wisdom. You know what I'm saying? And so and stop trying to get rich quick. And yeah, you can make money quick. As soon as people make some money quick, but then you see how quick they lose it. They give it right back to the Jackboyz, the real Jackboyz. So risk stuff like that. You know what I mean? Yeah, you can increase your risk. Just type it in here. I want to go 20%. Okay, well, let's understand that, it's 20% or 25%, a quarter of your account. Can you stomach that? You know what I mean? If you can stomach that, then that trade you can live with, you can go to sleep with. The market's gonna crash, whatever it's gonna do, max that I'm losing is 1,200 out of a $5,000 account. So this stuff is built in. You just put in your account size, put in the risk management, uh, some other good stuff that's in here. Of course, it's simple. It's simple. You just put in whatever accounts you're trading out of in here. You click it like it's a drop down. You type in the symbols that you're using, and then you put in whether you received a credit or you paid a debit. So if you're a buyer, then that's debit. If you are a seller, then that's credit. Simple as that. You just need to let the system know if you took in a debit or credit. And then you manually type in the strike prices. All right. Then this is just for your journal keeping. And then you put in a date that you actually entered your trade. And you put in the expiration date. Doesn't mean that you got to stay in this trade until expiration, but it's good information to have. And the system is going to let you know how many days you got left. It's like a reminder, let you know, hey, you got 4 days left on this trade. You can bust a move. And then you put in your quantity, like how many contracts are you trading? Are you trading just one contract, 5 contracts? Simple as that. You put that information in there, and then you put your contract prices. Remember, we're not trading stocks, we're trading options. So this helps you to train your eyes for what we're actually doing. Okay. You sold, if you sold a credit, then you took in on this one here, I took in 100, $1.85, so $185 I took in on that, and then I bought it back at $115, which that's going to give me a profit. So these are the contracts. So this is very valuable information. Um, all members, so if you're a subscriber, then you get 40% off of this stuff. Uh, and then all the other stuff is, you can put in that stuff. What's important is that, you see the fees that you're paying. Whatever your contract fees are, make sure you put that in here. And then the system does the rest. So you just need to put in the fees, how much you're paying on the contract, and then it's going to let you know how much you really made. So the brokers don't tell you how much you really made. They just tell you how much you made before all your fees and stuff out there. So yeah, looks like you made X amount of dollars, but really you didn't. You know what I'm saying? Because of that. Let me just look at the first one. Uh, where did it go? Right. So it looks like you made $230 when you look at Thinkorswim, right? That's what it's going to look. But then, after your contracts and stuff like that, you see you took in a 49%, target, but really you only made $213. That's how much you bought home. So that's the value of what we got. Also give you some good visual on like, your career as a trader, what's your win rate? What's your loss rate? What do you break even at? So it helps you to understand like, man, I need to get better. You know, it gives you a whole lot of, information. I'm not going to go into too much detail on it, but just understand all members, you guys get like 40% off on it. If you don't have your coupon code, make sure you hit me up. Uh, hit me up on Facebook or email, and we'll get the code over to you. But this is all on the website. Once you get it, you'll be able to download it and be able to use it. So definitely make sure you guys take advantage of that. If you know somebody else that needs our help, okay, they're drinking somebody else's Kool-Aid or whatever they're doing, get them out of there, get them over here so they can really, learn how to be successful. I want you to be successful at it. Whether you get rich or not, that's not our goal. The goal is to generate income. Okay. I'm not saying you quit your job, but this is like an extra bonus for you. Okay. Maybe trade for a down payment on your house, trade for a purpose, trading for, that new car you want to buy, that new boat you want to buy, kids' tuition, whatever it is, you got a purpose to do. That's what we're trading for. It's not like, get rich. If you get rich, then great. And we actually had somebody in the group that, crossed the first million 2 weeks ago. A friend of mine, we're more advanced trader. But it happens. And you got people that's in the group that's doing it, you know what I'm saying? So yeah, that's definitely a possibility. But that's what's up, man. Make sure you guys check out the website, wallstreetjackboyz.com. Tell a friend to tell a friend to tell a friend to join the crew on Facebook if they have doubts, they're skeptic, bring them in the group so they can see, what we do on a daily basis, This is real life for us. So that's what's up. Rob, what you got here? When I go long, I buy 70 delta, sell out of the money at 30 delta to reduce my price and get a bigger return on my dollar. Okay, yeah. And again, Rob is a more, advanced trader. So good. Ron B says he's getting it tonight. Great. Gotta go. Lovely session. Thanks, Marcy. Have a good night. I'm concluding the session right now anyway. And thank you guys for, checking it out. I'm loving to see what you guys will be posting this week coming up in the group. No problem, Mark. Corey, you good? Jermaine, you good? Mia, are you good? Ron B, are you good? You guys need anything else before we conclude? All right. Well, there we have it, man. Appreciate you guys. Love you. God bless. Peace.